Good evening. This is Tom Alexander. This is a special stock market report that I'm doing on Wednesday evening, October 22nd. This is for trade tomorrow, Thursday, October 23rd. We had some selling today off of the highs. I sent out a special report in the middle of the afternoon, actually very close to the lows. And in that report, I said that it could be very bearish if the indices were to close close to where they were trading at that point in time. Well, again, that was very close to the lows of the day. The indices subsequently bungee jumped back up deeply into the session range and closed right around the 50% level. Now, all the indices reached very important levels from an auction market perspective. Let's take a look at the charts. Okay, these are all charts that I put in the weekend update that you can access from the website, alexandertrading.com. Go to weekend update, weekly reports. It's free. You can see what I said, and you'll basically see these charts. Now, the assumption was coming into actually this week was that we were going to get a very sharp move away from the current levels because we had formed very mature balance areas. And that is still the case. We're in very mature balance areas. Now I'm going to collapse this. And this view is, these are the monthly auctions. Each profile unit is 1 month of trade. Each letter is 1 day of trade. Now, what I'm going to do, I'm going to show you, this is all basically one auction, October and September. Now, you have this blob here. So let's define it further. Let's split it out. Okay, now what you're seeing, this is much more clarifying, and this is how you want to use the market profile graph. The market profile graph is not just a static graphing format. You have to understand how auction markets develop. You have to understand what market profile was intended to do, which to show auction market condition. And then you can really, at times, make good use of the market profile graph in helping you determine on an if-then basis what is going on. So we broke out of this balance area to the upside on Monday. And I said then in our member area that the assumption had to be that we were going to trade higher. We would trade higher immediately. This was a very specific market condition and an attempt at an initiative break out of a mature balance area. Now, also said, if we traded deeply into the range, that it would, my dog is crying, hold on. Could institute a false breakout trade. And a false breakout trade is a trade when you have an attempt at an initiative break, it fails, and you trade back through the range and a fraction of the time it took to create it. Well, that's what it looked like was underway this afternoon when I sent that report out. Now, as you can see on my screen, we bungee jumped back up roughly to the midpoint of today's cash session range. Now, we also bungee jumped from a critical area. We bungee jumped from this high volume node down here that was formed. This is a very critical area. It is even more critical now because it has been tested. So what you would, under a bullish scenario now, you really should not see any of the indices below today's low by very much or for very long. And if they do get down there, they should immediately reject that area again and trade sharply higher. That's where you are. Now, if we do start trading below today's session lows, then that's telling us that we're going to trade much lower, possibly and probably very sharply and very quickly. Okay, this is the SPX. Let's look at the NDX. Here's the index. And I'll split this out. This is the October trade. Okay, here you see this was all that balance that formed following the dramatic crash Friday or so ago. Then we had all this chop and churn. We traded down into that high volume, a little bit deeper than did the SPX, but nevertheless, you still got the bungee jump away from this area. So that's the NDX. Let's just run through some of these. NDX, let's look at the New York Composite. Very similar view. It actually held up pretty well. Its decline wasn't as dramatic. Let's look at the Russell. Now, the Russell is showing a little bit of relative weakness. Yes, it is. It's showing a little bit of relative weakness, but it was showing relative weakness coming into this week. The Dow is showing relative strength. So you have the big high cap weighted indices leading the charge higher, holding up relatively well as usual. Here's the equal weight S&P. It's holding up pretty well as well. So there you have it. By the way, VIX was elevated a little bit today. It was not as high as it has been recently. It's still relatively elevated. But once again, today was an opportunity for this market to completely collapse. We'll see what happens tomorrow. But today's lows now and all of these indices are really important, and we should not, under an immediate bullish assumption, we should not see any of the indices below today's session lows by very much or for very long. And if we do get down there in one or more of the indices, that area should be immediately rejected under a bullish scenario. If it's not and we see selling, then we could very easily see the Friday crash lows. You guys enjoy your evening. I'll speak with you again very soon.